Mr. Setty, there's also been a flight of capital to the stock markets, and the reason I ask you this is it means that deposits have been lagging credit. How do you view this scenario? Do you see that kind of having stabilized? Because a few quarters ago it was a bigger issue in some ways than it seems to be now.
Yeah, the latest numbers indicate that I think deposits growth has overtaken the credit growth, which means that the equilibrium is being achieved now. It will stabilize around 11 to 12%, both on the deposits and advances side. As far as savers to investors, I think it's a debate which has been there actively in the various fora. It is inevitable in my view, in the sense that as the economy matures and investment opportunities are seen, and more importantly, ease of doing investments also.
Yes, on the phone, the point that you made about the mobile phone.
It's not only about investment in equity market. I keep saying, today the flight of money from the savings account to fixed deposit is also there. Because it's so easy to move the money from a savings bank account to a fixed deposit account. So ease of doing investment and investment awareness. Obviously, the mutual funds also have contributed in terms of creating this investment culture. But eventually, as they progress, there will be a better asset allocation, which means that, the deposits continue to be a critical component of investment basket. I think all investment advisors definitely tell everyone that you can't put everything in the equities.
You have to have a basket.
You have to have an allocation. And deposits will continue to be an important part in the investment basket of any individual.
What's your own view about you referred to that point about in some ways trying to ensure that fixed deposits are incentivized, perhaps from a tax treatment point of view? What would you say to that?
So obviously, if you ask me as a banker, I would say that there should be
I'm India's largest banker, not just
equal treatment for all savings instruments. But I think more importantly, many of the instruments investments which happen and the deposits have characteristically different nature, right? So one thing is that at least to encourage people to save long term. Maybe, they can give some benefits to the long-term deposits. Today, I think 5 years is the minimum period to get a tax benefit. So if that period can be reduced to 3 years, there will be good amount of savings. But I don't know whether tax alone will make anybody to come in here. Because see, a lot of people are also moving to other alternative investments for return purpose. It's not only taxation purpose, right? And the returns, we will never be able to match a savings instrument, a mutual fund instrument, or an equity instrument. But what we can provide to the people is the safety, liquidity, and the stability of their investments. I think the characteristics of the investments is something what we want to project in a bigger manner.
Mr. Setty, this is absolutely sort of a relevant point because as you made that point, as the economy matures, a certain section, including first-timers who are entering the job market, their risk-taking ability or risk appetite is far higher than maybe now what it was 10, 15, 20 years ago. I want to take that point on the retail side a little further. What's your take on the broader retail credit story? Because there's also been stress when it comes to unsecured credit that also has, invited the regulators' attention in a significant way. What's your view on this?
As I mentioned earlier, I think post-COVID retail credit growth has been significant. Even before before COVID, the post-NPA cycle in the corporate credit, I think most of the lenders consciously moved to the retail, which means that the retail credit growth rates have been more than what the system anticipated. This growth, retail credit, the broader terms have 3-4 components. You have home loans is the biggest component of retail credit. A lot of people think that the retail credit means only the personal, unsecured personal loans. The good news is that in the overall system, the retail unsecured personal loan constitutes just about 10%. And if you take only retail credit, it's just about 1/3 of that. It's predominantly the home loans which
create good assets, capital assets.
And also, a lot of these buyers, home loan customers, are first-time home buyers.
And you are one of the strongest players.
We are the largest player. We are the largest player. In our books, 95% of the borrowers are first-time home buyers. So we are creating that enabler for them to buy a home of their own.
And you also have the lowest delinquency rate when it comes to
home loans, but in general have a lowest delinquency. Of course, ours is historically low delinquencies there. No, what I'm trying to say is that yes, the growth rate of unsecured personal loan has been a matter of concern, both for the regulators as well as for the lenders. So obviously, regulator has said that there should be a better underwriting, number one. Number two, if you're taking a little risk, more risk on the unsecured personal loan, you please allocate a higher capital. So increased risk rates also have come. But I see that, that unsecured personal loan is moderating now. But the important segment in the retail credit, that is home loans, is growing very well.